Today's announcement that the Reserve Bank's Deputy Governor will be promoted to the top job had absolutely no impact on markets whatsoever. That's because markets view Michele Bullock as a continuity candidate and reckon she's unlikely to do anything that Philip Lowe wouldn't do. On that note, let's look back at the RBA's track record on inflation under Philip Lowe. For most of his 7 years as governor, the bank failed to meet its core inflation target of 2 to 3%. It started off being too low, and now it's way too high. Because of this elusive Goldilocks situation, we're now experiencing the most aggressive interest rate hikes in decades. Although rates didn't remain low until 2024, like he assured us they would, Dr. Lowe does deserve credit for COVID stimulus measures which helped bring the unemployment rate down to its lowest level in 50 years. But that's not going to last, because the next RBA Governor, Michele Bullock, recently said unemployment needs to rise to 4.5% in order for cost of living pressures to come down. So basically, that's 140,000 jobs lost because of the greater good, as economists claim. Today, the All Ords rose by a pretty decent 0.8%, and it's jumped 3.8% over the week, which makes it the best week the share market had all year. Almost every sector went up today, with tech, property and energy among the best performers. The main driver of this was Wall Street, as tech stocks surged after inflation in America fell sharply. Meanwhile, gold, oil and iron ore were pretty steady, and the Aussie dollar had a pretty hefty rise this week to 68.8 US cents, on expectations there might be one more rate hike from the RBA this year. And that's finance.